If you're watching this video, congratulations! You finally opened your Hong Kong business account. The next step is making sure you maintain it by following compliance rules and best practice. Because if there's one thing you absolutely do not want as a business owner, it's having problems with your account. One day, you're processing payments normally. The next day, everything's frozen and your business comes to a stop. Hi, I'm Bertrand from Statrys. The truth is, most account issues happen because business owners are not careful when it comes to following standard compliance rules and best practices. In this video, I'll cover the common things that can cause your account to be flagged, frozen, or closed, and how to avoid them so you can focus on growing your business instead of worrying about your business account. Tip number 1. Your transactions must match your business type. This means your transactions should match the nature of your business as disclosed during onboarding. This seems obvious, but here's what happened. You told the bank you're a software development company. All good. But now you're selling physical products online. To your account provider, it looks like you lied about the nature of your business. So the bottom line, your transaction should be consistent with what the bank expects. Here's a simple analogy. You buy a flight ticket from Hong Kong to Bangkok. Fine. But now you want to use this ticket to fly from Hong Kong to Paris. What do you think will happen? Will the airline let you change routes? Definitely not. Think about it the same way when you want to move your money around the globe. Banks and fintech providers approve accounts based on their understanding of your business and specific risk profile. When your actual transaction don't match, your account can get flagged. It's that simple. If your business evolves or you offer different types of services, having separate accounts for each area can be useful. Don't leave your account provider guessing about what you sell or provide, or wondering why your transaction patterns are inconsistent with your company's business model. Tip 2. Avoid high-risk transaction. That one is not always so easy. Let me explain. Here's what happens. If you make a transaction that banks think is risky, they have to review it manually. These reviews cost money. And if it costs more to check your transaction than the money you bring in, then the bank may close your account or make it very hard or expensive to keep operating. This means you should be extra careful when dealing with high-risk countries. But the problem is, what seems like normal business to you might trigger automatic monitoring by your bank if you're dealing with certain jurisdictions. Let's take an example. When you think of Thailand, you might think of holidays, nice beaches, and good food. However, did you know that Thailand is considered high risk for international payments by most Hong Kong banks? So to avoid this issue, let your bank know where you operate your business. Again, it's all about visibility. The more visibility you give the bank about your operation, the smoother your payments will be. And never use your business account for personal expenses, like buying presents for your family, paying tuition fees for your kids, or anything else like that. Tip 3. If you pay individuals, have proper documentation. Be careful when using your business account to receive or make payments to individuals, especially for high volume transactions. Business accounts are meant for, guess what? Business-to-business transactions. If you need to pay individuals, like freelancers or contractors, have supporting documentation. And at minimum, you should have an invoice, preferably a contract or even a copy of the individual's ID. If your business model involves many payments with individuals, use a payment gateway like Stripe or PayPal instead of direct bank transfers. This creates a cleaner transaction trail and reduces compliance risk. Tip 4. Avoid crypto transactions. So if you are a crypto friend, but avoid cashing out cryptocurrency using your Hong Kong business account. This may trigger compliance issues and result in your account being frozen. Due to very strict anti-money laundering laws, crypto transactions raise red flags. Banks have to report anything suspicious, and they would rather avoid the risk altogether than deal with potential penalties. You've worked too hard building your business to let something that's easily preventable destroy it. Now, let me recap the 4 key tips. Match your transactions to your declared business. Avoid high-risk transaction or be aware of what is a high-risk transaction. document individual payments properly, and avoid crypto transactions. These tips could be the difference between the smooth operation of your business account and a devastating business account closure. Found this useful? Subscribe for more informative Hong Kong business account advice. Thanks for watching, and here's to keeping your business running smoothly. Bye bye, au revoir, see you next time.